This episode is supported by LoopNet. LoopNet listed properties are 283% more likely to lease or sell. That's 283% more likely to find a tenant or buyer when listed on LoopNet. Help your commercial property be seen by the right audience at the right time in the right place. Be seen on LoopNet.
I think that understanding why we do things, looking for better ways to do things has really led to a lot of growth. So I think that the culture here, the values here, hiring great people that are willing to challenge the norm, and then our focus on technology is really what's led to our growth over time.
Hello, welcome to the REIT Report. I'm your host, Sarah Borksel-Keto. I'm pleased to be joined today by Scott Stubbs, Chief Financial Officer at Extra Space Storage. An up-close look at the past 2 decades at the self-storage REIT and what might lie ahead. Scott, welcome to the podcast.
Thanks for having me. It's good to be here today, Sarah.
So, Scott, August 20th marks 20 years since Extra Space's IPO. Back in 2004, Extra Space was one of over 24 REITs holding an IPO. And so can you talk a bit about the decision to seek a listing at that time and what the general mood of the market was?
Yeah, thanks, Sarah. So back in 2004, Extra Space had been in a growth mode. So we decided to grow the company in earnest in 1998. And from 1998 to 2004, we'd continued to buy properties. 1998, we brought Prudential Real Estate in as an investor, and we began growing the company. During that time, it was difficult to get loans. And so it felt like we were always looking for loans and capital. And so one of the options we looked at that time was an IPO. We talked to investment bankers. Clearly, investment bankers are always going to be in favor of an IPO. So it was something we decided to really take a good hard look at. The time there were 2 public self-storage companies. You had Public Storage and Life Storage, and Extra Space at the time would provide another small cap option. So we felt like it would be a good thing for the company, and we felt like that it would give us the ability to raise capital in a more efficient and easier way going forward as we wanted to grow the company.
And was the idea of self-storage as an institutional asset class fully formed in 2004? Or would you say there was a fair amount of investor education involved?
So it was a bit different in 2004 than it is today. It was less institutional. So at the time, you had Public Storage and Life Storage that were both public companies. Public Storage was a large public company. Life Storage was much smaller. So they were familiar with self-storage, but it wasn't necessarily what was considered a core asset class for a real estate investor. So we spent a lot of time educating investors on the stability of self-storage and the stability of earnings. So when we went to events, you'd be meeting with investors and they'd be looking at different asset classes, whether that was office or apartments or malls. And I think that we were a bit of an outlier at the time, and there were still some negative connotations about self-storage. I think that it did take some time to help people understand that self-storage is a great asset class. It's very stable. It is institutional. And your other thing that happened is self-storage went from being less institutional in their operations. So you used to have mom and pop operators that would operate a self-storage property with almost a whiteboard where they would have magnets showing which units were rented. They would raise rents once a year. So institutions were a little nervous to invest in self-storage because it was still a little backwards. And so we spent a lot of time on the technology side and educating them with how we were doing things a bit different.
And as you look back at the IPO, were there any surprises or challenges that really stood out to you?
Yeah, so I think the thing that probably surprised us the most was the volume of work and how long it took to become public. As a private company, we produce financial reports, but it wasn't necessarily SEC quality. So we had to go through a process to get our financial reports to a caliber that you could report to the SEC. So we started the process in January of 2004, and we actually didn't become public until August of 2004. So it took us almost 8 months to get to the point where we were able to list on the New York Stock Exchange. It was amazing and a bit overwhelming, the amount of work that the lawyers and the accountants went through. I remember so many hours drafting the S3, the hours spent rolling up the financial statements. We used to report individual financials. Now you needed to do a roll up of the entire entity, and then the structuring that goes into a deal like this, because at the time we were going to buy out some of our institutional joint venture partners. And then we also wanted to get credit for some of the lease up that was taking place in some of our stores. So we had to come up with a creative structure, and it spent a lot of time. We spent a lot of time structuring that. I remember one particular trip when we were back in New York, and I was planning on being there for 3 days, and I came home 9 days later. So there are a lot of unpredictable times. And I remember during that trip, we couldn't even get a hotel for long periods of time. The Tribeca Film Festival was going on that week. Everything was booked in the city. You ended up having to wash your clothes in the sink. So long week for me. Each night when I'd call home, my wife and tell her I was going to stay another day, it was a pretty short call. She was not very happy that I was going to be staying that much longer.
I'm sure. And it sounds like there's no instruction manual for an IPO. You just have to see where it takes you.
Very much the case. The investment bankers obviously have a lot of experience in the lawyers, but each IPO is a little different, and the reaction of the market to the IPO is going to be a little different. So you roll with it, and things don't turn out exactly like you hope, but things turn out how they turn out, and then you take it from there.
This episode is supported by LoopNet. LoopNet listed properties are 283% more likely to lease or sell. That's 283% more likely to find a tenant or buyer when listed on LoopNet. Help your commercial property be seen by the right audience at the right time in the right place. Be seen on LoopNet. And Scott, I understand that in 2004 you were also facing challenges of a personal nature. Can you give us an idea of what you were going through at the time and how you were able to balance your work and home pressures?
Yeah. So in 2004, in addition to our IPO and kind of your normal job, I had a couple of things going on in my personal life. I had really two significant events that kind of shaped the year for me. We were in the process of building a home at the time, and we had sold our existing home much quicker than we thought it would. It sold just very quickly. We sold it the first couple of days, and we felt like it was the best decision to sell it. So at the time, we moved in with my in laws. And so that can be a little scary. And that was a stress. You have the stress of living with your in laws, you have the stress of building a home. And then on top of that, my 2-year-old daughter was diagnosed with Wilms tumor. Wilms tumor is a type of childhood cancer, and she had her right kidney removed and went through 18 weeks of chemotherapy. Not necessarily what you want to be dealing with at the time, but I'm lucky enough to have a wonderful wife who took a very large load on herself. And I was lucky to have in-laws that were willing to have us there. It was some difficult times. I remember working very long days, and then there would be times when I would run home for dinner and then put my kids down and come back to work. What you found is you kind of had to deal with things one day at a time and I relied heavily on my wife, my extended family for support. And I'm very grateful for what they did for me back then.
And Scott, how's your daughter doing today?
She is turning 23 this month,
Okay.
so she's doing well. Very blessed. I'm very happy to have her around still.
That's excellent. And if you had a colleague really going through a similar experience today, is there anything that you would recommend as useful coping mechanisms?
So I think you've got to take things day by day. And I think you've got to find an outlet for yourself. I think that oddly enough, I found myself reading probably more than I've read in my whole life. And I would be extremely busy, but there would be times I'd just need to take some time and get my mind on something else. I actually enjoy reading history books, and I read a lot that year, whether it was on a plane or whether it was just late at night and just getting away doing something else. The second thing I would tell you is I think you've got to find joy and some happiness in the people you work with. I think that in a situation like this, you spend a lot of time with people and those that you work with, and life's too short to work somewhere where you don't enjoy the people that you work with.
And you've been at Extra Space quite some time now, so that does point to a supportive, positive work environment. What do you think it's doing right with regard to its employees?
So I think Extra Space has done a really good job in treating people like you'd want to be treated yourself. So I think that's been the culture that started with Ken Woolley. Ken Woolley's just a great person. He treats people kindly. He's going to be, warm with them. He's also going to be honest with people. And I think that you need to be honest with people, reward them fairly. But I think we've always had a very good employee culture here. We try to balance work-life balance for people. So the flexible work schedule where if you do have something where if you need to go to a program for your child in the middle of the day, if you have a doctor's appointment, we've always been flexible. And I think that people genuinely like working together here. I think for the most part, people have friends or coworkers that they enjoy spending time with. So I think that there is a good morale here. It's a company where I think we live our values and we treat people well.
Great. And what about what Extra Space is doing right in terms of growth? Because at the time of the IPO, you had 136 locations, and today that's over 3,500. So how have you been able to achieve that?
I mean, I mentioned our core values before. I think that our values have really led to our growth. I think that doing what we said we're going to do is very important to us. So, integrity and everything that we do. So, when we're looking to buy a deal, we don't want to retrade if we don't have to. We want to do things right. Other values that we have here is innovation, teamwork, and passion. It's a good environment to work somewhere where you're growing. I think the culture here is one to never be satisfied. I think it's people here are very comfortable asking the question, why do we do things that way? And I think that one of the things that frustrates me more than anything is when someone says, that's the way we've always done it. I think that understanding why we do things, looking for better ways to do things has really led to a lot of growth. So I think that the culture here, the values here, hiring great people that are willing to challenge the norm, and then our focus on technology is really what's led to our growth over time.
And Scott, where do you think the biggest opportunities for Extra Space going forward might lie?
Storage is a pretty fragmented business. So the big companies own about 30 to 35% of the assets out there today. So yeah, I think there's still an opportunity to roll up a lot of the self-storage industry, and whether that's through management or ownership. So I think growth is still a big opportunity for Extra Space. And that's in our DNA. That's who we are. We're going to continue to try to grow and try to find opportunities to grow, get larger, and make Extra Space a great place to work.
Great, Scott. We've covered lots of different topics, but any closing thoughts or anything that we haven't covered?
I think self storage continues to be a great asset class and Extra Space. It's been 20 years since we've been public, but I think that one of the things that's been consistent is we have great people here. It's great to work with so many good people, great to work with people that are happy, enjoy their jobs, and are willing to stretch. We did a big acquisition this past year, and it was amazing to see all of the people work so well together. We had so many teams work so hard, and they really did a good job in challenging the norm, in integrating a large acquisition with the life storage properties coming on board. And people are really what make Extra Space a great place to work.
Scott, thanks so much for taking time to speak with us today.
Sarah, thanks for having me. It's a pleasure to be here. Thank you.
And to our listeners, if you enjoyed this episode of the REIT Report, please subscribe or leave a review on your favorite podcast platform.